corporate entities that are not financial institutions brought under the ambit of PMLA with the new amendments with the definition of group?
The definition of
Group. Or let's ignore the definition of group, but generally is have corporate entities brought under the ambit of PMLA along with financial institutions.
Corporate entities per se have not been brought into the purview of PMLA. It is otherwise. It is the other way that has been done. Those who are dealing with these entities, they have been brought under PMLA. The ideas of these two notifications are slightly different.
Right. I think whoever is conducting those activities, whether corporate or non-corporate, whether corporate or individual, doing the activities which have been notified are under the radar of PMLA, basically.
Like, let me give you an example of co-working spaces.
Right.
What they are doing, they are providing their premises for the purpose of GST numbers and other things for opening of the registered office, etc. Now, those are the entities who have been brought under these notifications.
Right, right. Surely. Okay, what are the steps to be taken by chartered accountant or a company secretary to ensure that the client should not be under the radar of ED? That's a very wide question. I think
I can give an answer.
Yes,
that
yes.
There can't be any steps that can be taken, preventive steps that can be taken to prevent the clients or the corporates to be not under the radar of ED. If you commit a scheduled offense, you are under the radar of ED. If you are a reporting entity, you have to report. There is no exception to it.
Understand. You know, one case I would like to cite here, not cite, but I would like to share the facts which I happen to experience it myself. We were reviewing an agreement of a client wherein there was a simple scope of work, and the money, the exchange money, I mean, the consideration was 3 crore rupees, single one-shot payment in exchange of those two-liner scope of work. And you know, the recipient of that money was a newly formed one-person company, OPC. So, you know, while the agreement came for a legal review, more than the legal, you know, my question was on the transaction that, you know, the scope of work is just 2 line. The recipient seems to be just a new company, which is an OPC. And you are saying that 3 crore is the value of the services that is going. So I think as professionals, lawyers or CA or CS, one is the legal aspect of an agreement, but the other is the underlying aspect of an agreement that we need to be very vigilant about. If in the garb of a service agreement, huge money or crores of money is being sort of tried, you know, exchanging hands, you are well within your right under PMLA to question your client, to first do a due diligence or an enhanced due diligence of your client. And if you're not comfortable, you know, sever your relationship with those clients and maybe report wherever the reportings are to be done. But Mr. Dalmia, if in the course of our professional duties we come across such suspicious sort of transaction, which is not a financial transaction, but the example that I just gave by virtue of an agreement which is about to be signed, and we are reviewing that agreement. Now, where should we report? What should we do?
There should not be. There is no need of any reporting until that person becomes your client.
Right.
That is one thing. If somebody is coming to you disclosing certain things, it is not under your obligation to go to the appropriate authorities and report each and every person who has come to you. That
right.
person may be genuine, may be ingenuine, may be wanting to do the actual business, may be just window shopping, in the sense that you are not supposed to report. But if you are engaged with a particular client, only in that case your obligations will start.
Right, right. Understand. No, but if we are engaged with a client and suddenly in midway we realize that he is not, you know, he's probably about to commit or is committing a scheduled offense in the nature of money laundering, then what should we do?
About to commit, no reporting, but if he is committing, reporting.
Okay. Understand.
Just to give you another example, Sumit, many times happens, one of the customer comes in NBFC or a bank, say that I need 50 crore rupees loan, but he is sweating and given KYCs, then he vanished off after giving these details. So obviously bank manager or NBFC manager or kind of professional should look upon the, should put the lens that why that particular person is looking for 50 crore rupees of loan. So you can, as mentioned by Vijay, that you can mention and you can report it.
Right. Okay. What are the reporting obligations when you are only helping the client with registered office and directorship services, where there would be no visibility of financial transactions?
If it is your business, then reportings will come. If you are doing your professional activity in that course, it is you are not supposed to report, because we have to distinguish between the two notifications, third May notification, ninth May notification. I have pointed out two words, profession and business.
Right.
So we have to look from that perspective. If you are a chartered accountant, company secretary, you are providing your professional services, no reporting is to be done. But if you are into the business, if you are running a website for formation of companies, in that particular case, you are into the business of formation of companies. You may be employing others. In that particular case, the situation is different. So slightly we have to also holistically synchronize both the notifications. It's not that the government is after the life of chartered accountants or company secretaries or professionals. It is basically to bring a sense of responsibility in them.
Right. So do the CA and CS and even the directors need to register themselves anywhere after this notifications?
My answer is no, it is not required.
Somesh, what is your opinion?
No. Aligned with my partner.
Right,
No.
right. Although I think more clarity needs to emerge in all these aspects by virtue of probably amendment in the rules or the which should prescribe certain procedures, because if suddenly people fall in the definition of reporting entity, which was earlier meant for banks and financial institution, I think a lot more clarity is required for individuals and small businesses. Okay. Could you please throw some light on Rule 9, especially description of account-based relationship?
Vijay, you want to take?
You please take it.
Account-based relationship means you need to allocate customer identification number. And then you will say that you will do several transactions with that particular client. Maybe first you will be involved for the incorporation, then they will be involved as per your memorandum of understanding for understanding the business strategy, and you will provide any sample report that you should work upon these matters. You can launch those products. You can help in the regulatory licenses. You can help as a designated board member in their companies. So series of transaction is carried out under an account. So that's why I have again I am repeating it. There are two ways of reporting in FIU. One is account based, one is transaction based. So account based means you have allocated an account to a client, and within that account you have provided 5 information. One, cash transaction more than 10 lakh rupees. One, suspicious transaction, but because you was a director but they were not providing you the records. Third transaction is currency related, counterfeit currency, that you have seen that there will be an illegitimate currency. Then you have reported these 3 things when you are dealing with an account. Account means account of a client.
Right. Somesh, you had also mentioned the central KYC registry, CYC, KYCR, etc. Right. Again, the access of these registries have been open to financial institutions and banks. Now, if the CACS onboard any new client, of course, they should do a client due diligence, as you were saying. They should take the Aadhaar or the PAN or other officially valid documents. They should take a memorandum and articles of their client, etc. So that documents can be taken. But are they required to file it with the CYC, KYCR? Because again, there is no mechanism, no guidance on how will they get access to those registries, etc., etc.
So recently, Digital Lending Association (DLI) given to representation to RBI also that whether we need to file and record or whether we need to file an information. So from earlier in CKYCR, we used to file scanned signatures also of the customer. We used to file OVD also, officially valid documents, and we need to file deemed OVD also. Deemed OVD means if Aadhaar is not having your current address, then you need to take a rent agreement from the customer, right? From the client. So those deemed OVDs also we need to file with the CKYCR, but as per the latest news coming from RBI and from the CKYCR, as per my conversation with them, and as per my knowledge and as per my reportings which I am managing, we are not filing so many documents. The logic behind is that CKYCR is having several filters and API integration with MC also and with other regulators also.
All right. So I think clarity still needs to emerge with respect to these individuals. Do the new regulations mean that even statutory auditors have to report suspected PMLA transactions to the appropriate authority? Mr. Dalmia?
Obviously, they are the practicing one. So they need to file suspicious transaction. They need to file other transaction. If they can report to the RBI about the bank or about the NBFC, so they can additionally file the same fraud reports to the FIU.
Right. Understand. Vijay, question for you. Why, somebody specific question to you addressed by the audience. Why environmental law violations have been included as a scheduled offense, and what are the implications for any company?
Sir, in case of legislation, there is no why. First of all, it is the desire of the legislature. It is the collective desire of the legislature, and because environment is a big aspect relating to the society. So that is the probable reason the environmental laws have been included in the schedule. Otherwise, I can't give any better answer to it.
Understand.
Welcome to Complinity Technologies. Complinity is India's leading governance, risk and compliance software helping companies to manage their compliance, contracts, litigation, legal updates, inter-financial controls and more. Complinity is a one-stop shop for all GRC needs. With our proprietary 12 GRC modules and real-time legal updates on 2,000 plus laws and 24,000 plus compliances. All in an integrated platform that is easy to use with automated alerts and risk management capabilities. Is why compliance managers, general counsels and chief financial officers choose Complinity every time. Join the most innovative and prestigious brands that use Complinity. Automating your compliance management, request a demo at complinity.com.